Welcome back to Yahoo Finance on the move. More of a push to the upside. S&P 500 now up more than 4 points. The Dow is up more than 130 points. And the Nasdaq, while still in negative territory, recovering slightly. It's off now about 44 points. Our next guest is going to help us answer one of the questions that a lot of people have, which is, in a period like the one we are in, how do you invest? Joining us now is Ric Edelman. He is not only founder of his own Edelman engine, but also a financial advisory firm, but also one of the founders, along with the Bipartisan Policy Center, for Funding Our Future. And we're going to talk about a program that people can tune into at 2 p.m. But first, big question. In an unprecedented time like COVID-19, do the fundamentals of investing change?
No, the fundamentals don't. It's great to be with you, by the way. No, the fundamentals don't change, but your behavior might, and that makes all the difference. We've gone through crises innumerable times in our nation's history. We're going to get through this crisis as well. So maintaining a highly diversified portfolio and holding onto it for the long term continues to be the proper advice. Our concern this time around, though, is that the severity of this crisis is so significant. It's going to take so long for the economy to dig out from its troubles. We saw the CBO report earlier today that it could take 10 years, costing $16 trillion. My fear is that many consumers who think they're long-term investors will in fact panic before this is over. That if there is a significant downturn in the market, similar to like we saw in 2008 when the markets lost almost 60% of their value over 16 months, some people will sell low, undoing the long-term good that they say they have the wherewithal to do. So this is a time to error check your emotions. If you really don't have the confidence that you're going to be able to hang in there no matter how bad it gets, and if you don't think you have the cash reserves, meaning if you lose your job through furlough or layoff, many of which are still to come, if you aren't sure you've got the ability to tide yourself over without raiding your investment account, you might want to go to a more conservative portfolio now before all of that happens.
Ric, it's Julie here. I want to pick up on that element, not so much the panic about the markets, but for people whose fundamental position right now is worse than it was because they don't have income coming in. And for those folks, they're probably, not going to be contributing to a 401k if they had one before, for example, or if they didn't, they're not going to be putting new money to work. How long a setback, I guess in the grand scheme of things, how long a setback is really going to be permanently damaging to their retirement?
It could be very significant. If we look at what happened in the aftermath of the crash of 29, after the 1979 oil embargo, if we look what happened after 2008, it took 10 years in each of those cases for the unemployment rate to get back to where it was. 10 years of unemployment. And The Economist magazine last week said this could take 10, even 20 years because of the severity of this pandemic. So people need to really acknowledge the situation for what it is. What are the prospects for your career, your ability to earn an income? Might you have to make fundamental adjustments to your long-term retirement plan? How long are you going to have to keep working? How much money will you truly be able to spend in retirement? How reliable are your pensions and Social Security, which have their own challenges even before the pandemic? We've got to do some serious reevaluation because this might not be as over as quickly and as easily as I fear some people are assuming.
Ric, so if someone comes into your office, and they have those questions. I mean, most of us want to be told what to do.
Right.
What do you tell those people?
We do a very blunt and legitimate evaluation of their circumstances. We look at how much money they have saved. Where are those savings? How much do they have in cash reserves? Meaning money we can turn to if they need to pay bills without having to tap into their retirement accounts or other long-term savings. Where can we cut their expenses, given the fact they may be out of work? What's their health? What are their family circumstances? Is it likely, even if they're okay, that they may need to provide help to children or parents, or even brothers and sisters, because so many families have just been disrupted. So we really need to take a sober examination of where you are, where you're likely to be over the next few years before this gets behind us, and your emotional state as well. Are you going to have the fortitude to hang in there, no matter how ugly it might get from an economic perspective?
Rick, I'm curious about the how much interest rates are playing into this, because obviously there are a number of implications from low interest rates. One of them would be the possibility of benefiting from refinancing, for example. Is that something that you're recommending for a lot of folks?
Very much so. It's one of the few silver linings we have in this environment. Interest rates are at historically low levels. The ability for you to refinance your mortgage is wonderful in many cases. In fact, many banks are offering what are called a recast, not merely a refinance, meaning you just call the bank on the phone and say, will you do a recast for me? Will you simply lower my interest rate without my having to go through the hassles of refinancing, the cost, the expense, the home appraisal, and all that? Because banks realize if they don't recast your loan, you'll take your business elsewhere and they'll lose it. So many institutions are willing to simply recast your loan, taking advantage of today's low rates. So yeah, that's something you want to take advantage of. It's a real problem, these low rates, for bond investors, for people who are savers, but it's great news for people who are borrowing money. So yeah, it's one of the few silver linings. We're also similarly looking at auto insurance. If you've got 2 or 3 cars sitting in your driveway or your garage, and you're not driving because of the shutdown, why are you still paying for auto insurance? You should probably cancel your insurance on 1 or 2 of your cars, and you could save yourself hundreds of dollars without any negative attributes. So we're looking at ways to give advice to our clients that we never would have thought of just a few months ago.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.